So hey guys, welcome back to SMC Trader. So this was a video I recorded and I'm normally giving the voiceover. This entry I will be explaining on this video and let's enjoy. So this entry was almost half an hour. It's almost half an hour and I will be explaining everything on this video. So over here, as we can see, there is a orange color gap. Okay, I marked. So I saw in the 15 minutes chart when the gap was closed with body. Okay, the 15 minutes candle body has been closed above this 15 minutes gap, this orange gap. Okay, then I simply changed my bias, and as we can see on the market, on the sell side there is no sell side liquidity, but on the buy side we can see there are some kind of liquidities on the buy side. So I simply took this entry for this reason. So let's see. And here, as we can see, I simply marked here. You can see there is a last fair value gap, 1 minute fair value gap. So I simply took my entry on the last fair value gap, and you can see this is a small entry, like 2 micro contract entry, as my stop loss is huge, and I put my target profit on almost its 128 handle. So it's a huge target profit, and on the, like, if we compare with the target profit, our stop loss is also huge. Okay, so I trailed my stop loss to, as here you can see, I trailed a little bit higher my stop loss, and I took my partial on the last fair value gap. So my stop loss was below that candle. Okay, like the week here you can see. So over here we can see my partial has been taken, and I am simply moving my trailing my stop loss below the 1 minute and 15 minutes fair value gap. So let's see, can this last fair value gap hold the price or not? So let's see. And as we can see, the 1 minute candle, okay, the 1 minute candle, the 1 minute last fair value gap, market simply closed the body above the last fair value gap. So the 1 minute candle has closed above the last fair value gap. The body has been closed above. Okay, so it's another confirmation that we are more bullish. So in my personal experience, I saw a lot of time that the last fair value gap have the power to reverse the price. Okay, so this last fair value gap can simply reverse the price, but see the video. Hope you guys will be learning and enjoying. So let's see what happens. So over here we can see the last fair value gap is being traded. If my last fair value gap, like 1 minute candle, can close above this last fair value gap, I'll simply trail my stop loss below the last fair value gap. Okay, 1 tick below the last fair value gap, and I put my target profit on the rejection block. Okay, this is a 15 minutes rejection block, and I am bullish. Like many of them will say that why I am taking my entry below the new day opening gap. This is a new, this is a new day opening gap. So many of them will comment down that why I took my buy entry below a new day opening gap. This is because on the sell side I don't have any liquidities. Okay, as today market has taken all the sell side liquidities, all the extreme sell side liquidities, like these liquidities were made, it's almost 3 to 4 months. Okay, so market simply took all those extreme sell side liquidities. Those are like weekly liquidities, so market don't have the sell side jobs. So market on the New York AM session, I saw that market was building some buy side liquidity. So let's see what happens. And now as we can see, market is simply trading a fair value gap, also trading the last fair value gap. And on the New York AM session, I didn't took any sort of entries today because I didn't get any sort of entry opportunities. And especially on Friday, The New York AM session is a little bit choppy. It's like seek and destroy mode. Okay, so on Friday I don't like to trade, but I was in front of the chart. I was looking for opportunities, but market didn't give and I didn't get any sort of entries. I get one entry, but like that entry was, what to say, not sure enough, so I didn't took that entry. So let's see, we can see the reaction from the last fair value gap, and I took a partial on this last fair value gap, and it's almost 2:47 p.m. so let's see. So over here, as you can see, it's almost 127 or 28 handles. So let's see. And this is not a paper trade. Okay, this is not a paper trade. So over here we can see the market is simply reacting from the last fair value gap and also building some kind of liquidity. Okay, trying to build a like 1 minute, what to say, some kind of small liquidities. Okay, also trading the what to say, a 1 minute fair value gap over here we can see. So let's mark this as a liquidity. So now we can see the market simply traded the 50% of the last fair value gap. Market traded the consonant encroachment of this last fair value gap. Now let's see the reaction from this last fair value gap. I want to see a body close above this last fair value gap. Okay, then I will be like 90% confirmed that the market is going for that buy side liquidity. Okay, or for making the buy side liquidity much more stronger, much more extreme, the market can simply reverse from this last fair value gap. So that's why I took a partial on this last fair value gap and simply trailed my stop loss. So here we can see market simply traded the 50% of this last fair value gap, and let's see what happens. Although you guys know that I got the profit. Okay, that's why like you can understand my like what to say feelings. Okay, don't look at the micro contracts or how much, like it's 1 and 2 micro contracts, it's not a huge. Okay, but I am simply uploading this video for the educational purpose, just for the educational purpose. Okay, so over here we can see I simply received almost 63 handles. Okay, I took my partial on the 63 handles, and now I simply trailed my stop loss below the 50% of the last fair value gap, cause from this last fair value gap, like from this upper, like the market is trading now. Okay, the last fair value gap market is trading now. From this fair value gap, market can simply react and trade until this last fair value gap, which was broken. Okay, so that's why I simply trail my stop loss and put my stop loss below the 50% of this last fair value gap, the 3 lines you can see. So over here we can see the market is trying to go higher. Okay, the market is simply trying to go higher, and it's almost a huge, like if I got the profits, it's a huge. Okay, so let's enjoy the video. So over here we can see the 15, like the 1 minute candle body has been closed above the 50%. Okay, so if this candle body close below the last fair value gap, this will be considered as a fake breakout. Okay, for the 50%. So over here we can see market simply reacted from this last fair value gap, and it's currently trading one kind of, what to say, it's trading the order block. Okay, so let's see. Yeah, it's making, I think it will take this liquidity, or it will make this liquidity much more stronger. Let's see what happens, but I don't want to see this. Okay, because for taking this liquidity, market can reach a huge, okay, the reaction can be huge, and this can stop me out. So let's see. And over here you can see I marked, this is our order block. Okay, the highest up close body close candle which has traded our 1 minute last fair value gap. So this is our order block, and over here we can see market is simply trading the order block and reacting from the order block, and the 50% of that order block is the order block mean threshold. So I want to see the market will simply, the body will be close above the 50% of this order block, I mean the mean threshold. The 1 minute body should close above the mean threshold. Okay, so let's see what we can do. It's again trading the order block and reacting from this order block. This is a perfect order block, and we are currently in, what to say, it's nearly about 80 handles something. Okay, 85 handles. Oh, sorry guys, sorry for interrupting. Like, for some technical issues my recording simply stopped. So over here you can see I got my whole profit. Over here we can see I simply targeted until the rejection block, and the market went until the rejection block. This is a screenshot, so I couldn't record the rest of the part, so I just took the screenshot. And over here we can see it's nearly about 128 handle profit. So this was the video, and the market reached until the rejection block. Okay, and this rejection block also can send the market like a little bit lower. Okay, so I don't want that. Also it can go below, like it can stop me out. Okay, because for making the buy side liquidity much more stronger, cause we can see on the market there is no buy side liquidity or sell side liquidity. Okay, so market now the market will simply try to make the buy side liquidities, or it will try to make the liquidities, or without liquidities we can't trade. Okay, we ICT traders, we are like, most of the time we are dependent on the liquidity. Okay, so like there is a important, like at the last of the video I am like to give you information. Okay, always remember liquidities are like magnets. Okay, liquidities attract the price, where you will be like, if the buy side liquidity is much more stronger, the market will move for buy side liquidity. Okay, and when it will be reversed, then think that it is going to make the liquidity much more stronger. Okay, so that's today's video. Hope you guys learned a lot from this video. Give it a thumbs up and subscribe to our channel. And as today is Friday, the last day of the market. Okay, so happy weekends and enjoy your profits. Have a nice weekend.